Good morning and welcome to my Forex market analysis for 3rd of August. Let's start off with dollar index. So I will just look over weekly to analyze what happened in the market for over a few weeks. We can see clearly that last week we had a bullish fair value gap here and we were expecting price to keep pushing to the upside. And previous week we got a bullish candle which suggested that there are more chances of price opening, making a low, pushing high, and closing. But instead, price opened, made a high, and gave us a strong bearish candle, eventually closing below this fair value gap. So weekly is overall bearish due to the price not respecting fair value gap, and we get a strong bearish candle. Now, where is drawn liquidity on weekly? It's this point. This will be the drawn liquidity. But we don't use weekly for our trading purpose. So let's start with uh, daily time frame. On daily time frame, first step is to draw the drawn liquidity line, meaning where the price wants to go, where the next liquidity pool is. So it's generally at higher lows or higher lows and lower highs. So this is a higher low where price pause for a second and then push to the upside. So majority of liquidity is below this point where we are expecting price to reach eventually in upcoming days. So we use drawn liquidity as target setting points. So if I want to sell it, my target will be somewhere around here, not below this, not above this, somewhere over here. Now for daily, what do we get today? We get open, we get a low, we get a high, and we get a close. As soon as Monday open, the market open, we already traded below and we are going up. It means market already went bearish and now it's pushing bullish. We need to be careful in this scenario. It's always better for market to open in a bullish scenario, open, high, low, and close. So this day was bearish. Open, high, low, close. This day was bearish. Looking at 4 hour, what do we have? Yesterday, in my Friday's morning analysis, I said we have a fair value gap. I'm expecting price to respect it and push to the downside. Just look how beautifully price is respecting these fair value gaps. Since last week, we have bearish value gap, price expansion, pull back into fair value gap, and then expansion. Pull back into fair value gap, and then expansion. So if I just follow the same idea that we have an expansion, then we have a pullback, and then we have an expansion. So by pullback, I mean if we get a pullback, then it means that daily time frame is making a wick, and then we're getting an expansion. We open, we get a pullback, the daily time frame makes a wick, makes a high, and then we get an expansion in which the daily candle expands. Today we open up with a gap. We already expanded and now market is pushing, which is also not a bad thing to do, but we need to be careful. So drawing out today's zones, 4 hour fair value gap are zones from where I expect price to respect is this bearish fair value gap that we have, and the another wing being the swing point, sweep of the swing point. Why this? Because it's a lower high. So people who sold here, their stop losses are above this. There are high chances that market will come, take out their stop losses, and then go towards this drawn liquidity, which is my idea of how I am looking at this price action right now. I'm waiting price to, I don't think it will hold this fair value gap. I think it will go to some major liquidity point, sweep it, and then push to the downside, eventually to this. drawn liquidity point. But it's always better to not predict rather than to react. If I get a trade from here, I will take it. If I get a trade from here, I will take it. But always remember that it's always better to trade on two sessions. That is open of London session and open of New York session. If I look here, if we get a London open, it will be somewhere over here, and then a New York session will be somewhere over here. By the time we reach here, I am expecting price could have turned bullish. So I feel like, or I think today we can go till here, and then tomorrow we can get a sweep and then push to the downside. So my this idea of price sweeping this liquidity is for tomorrow, not for today. For today, I have this fair value gap. If we close bullish, tomorrow I can take a liquid trade from this sweep and then push to the downside. But today my idea is price coming up, reacting to this fair value gap and then pushing to the downside. Now we have found out our drawn liquidity on daily time frame. We have found out our 4-hour order flow, which is price pushing to the downside. That is our trend. We have found out the zone from where we are expecting price to go to the downside, which is the bearish fair value gap. What comes next? Next comes a point. A zone is a zone is a really big um, price range. So we don't know if price will react from here and come down, or react from here and come down, or react from here and come down. It could choose any point. We need an exact point from where we are expecting price to react from. So for that, we need to go to daily time, to hourly time frame, and look for swing points. Now, what do we see here? This is a swing point. Why? We have expansion, pullback, expansion, and a pullback. So this will be a high low. Sorry, this will be a lower high. What I'm expecting is this lower high coincides with the 4 hourly fair value gap, the zone that we talked about. I'm expecting price to reach here, sweep this liquidity, tap into the zone, and then push to the downside. So we have an exact point in market from where I'm expecting it to react from. Instead of having a full blown zone, big range, it's always better to have a market point, which also coincides with this hourly fair value gap. So market will eventually reach here, fill this fair value gap, take out the sweep, tap into 4 hourly fair value gap, and then push to the downside. We have so let me type it on daily. What do we do on daily? We find our drawn liquidity point where we are expecting price to reach. So we are expecting price to reach on till this level, which is daily high low. Then we went on 4 hour. What do we find out first? We found out our trend, which is also order flow, means where the money is flowing towards. Then what do? We found a zone in market from where we expect price to react from, which is the fair value gap. Next, we go to hourly time frame. What do we find? A point in market. How do we find a point in market? A swing point, which could be a high low or a lower high, and which coincides with the fair value gap of 4 hour or the zone. What's the next point? Time in a market. Now it's important. Now we already found something over this axis. We need to find something over this axis. Let's find the time in the market. So I'll mark the sessions, which is 11:30 and 17:30 IST. So these are all UTC plus 5:30 time zone. Now we are in an Asian session. So now let's do a if else scenario. If this happens, we will do this. If this happens, we will do that. So at this point, we need to do if else scenario. If in Asian range, we close till here. Then in London, I want price to open, sweep Asia high, sweep the swing point, and tap into the 4-hour zone, which is this fair value gap. We open in London, go up, sweep everything, and close back in. That's it. Take a trade here, sell, put your stop loss above, and target to the daily drawn liquidity, which is this dashed line. So if we get a push in Asian till here, then in London we open, we take out the Asia liquidity, which will be this point. We take out the swing point and we tap into 4-hour fair value gap, and then we expand to the downside. So this is my first if then scenario. Let's do another one. If we just close somewhere over there, then I will wait for London to open and reach towards the fair value, towards my point where I'm expecting price to go from. Then I will wait for New York to open, sweep London liquidity, which will be this high, sweep swing point, tap into fair value gap, and then push to the downside. So again, if Asian does not push till the level, till the swing, till the point in market, then I will wait for London to push till here and wait for New York to open, and then open, high, low, and close. We sweep all the liquidities we have in market. We sweep the London liquidity and we push to the downside. So there are only two scenarios how market can play right now and how I can trade right now, which I already explained. The point being, if Asian session just expands till here, let's say, and then London opens, goes, take out all the liquidity and everything, and closes here. So for me to take a trade, I want price to close back inside the Asian session, which is this. So my trade would be like with such a big stop loss and till drawn liquidity, I will only get 1.5 para, which I don't want. I want rather to take an entry somewhere over here. So that's why if Asian session does not push to the level, I want London to push to the level. And then I want New York to sweep and then close so I can get a big trade from here. If we don't, then in London, if we sweep it already, then in New York, either I can look for a continuation setup or just skip the trade at all. So this is my scenario for DXY. I'm bearish on it. Only way for me to take a trade from 11:30 is if the Asian session pushes here, I get a sweep in London, first 2 hours of London, and then we close back in. Only way to take me a trade in New York session from 17:30 is Asian pushes, London sweeps, and then I take New York, or Asian pushes, London stays here, and then New York takes out all the liquidity, and then we push to the downside. So my DXY, this is the complete top-down analysis that I need to do in dollar index. I have all of my scenarios in my mind. I won't be surprised if market did anything else. I have all the scenarios already planned out. I have all the if-then scenarios already noted down, and I will only react based on these. So now let's go to EU. On EU, we have we had bearish fair value gap on weekly. We were expecting price to push to the downside, eventually hitting these strong liquidity, but inverse of DXY, we got a bullish close. If I look on daily, we got the change in state of delivery and we finally break out of this range, now pushing to the upside. But we don't need to look for daily and weekly. I just look it for my drawn liquidities. So the first step is find a drawn liquidity, uh, which is this swing point, this lower high will be my drawn liquidity. I'm expecting price to reach here. Now, next step is find the 4-hour order flow, meaning 4 hour trend. Where is 4 hour pushing? There are two ways to find out. Either find out the higher lows and higher highs. What's price making? So here we are making high low, high high, high low, high high, high low, high high. Second method is look at the fair value gaps. Are we getting bullish fair value gaps? Are we getting uh, bearish fair value gaps? These all are bearish. Or are we getting bullish fair value gaps? So we are getting bullish fair value gap. Clearly, the trend is to the upside. Now we need to find what we are expecting for market to do today. So if I go to daily, what did we get? We open, we already made a high, and now we are pushing bearish, the same as dollar index. If we look at uh, 4 hour on EU, this is not a fair value gap, by the way. If it opens on first candle, I don't consider it. It's mostly likely to be filled. Is there any other fair value gap here? No. What's the other point I can take a trade from? From this swing point, which is yesterday's low. So if price pushes still here, then I can consider taking a long. But again, it's so far from the price. By the time we reach here today, it would have been turned just bearish. So what I'm expecting for the price to do is today to go down slowly, and tomorrow we can get a sweep and then we can push to the upside. That's what I'm expecting. But for zone, from where I'm expecting price to react from, I don't see any trading zones. So I don't need to go to hourly time frame to mark a point and time on these axes. Because I could not go through 4 hour time frame, there's no need to go to hourly time frame. Again, we are clearly bullish, but do we have a zone from where I'm expecting price to go? Even though this shows like a zone, but because we open with a gap, that's why it's showing like this. It's a gap, not a fair value gap. Yesterday we don't have any uh, zones. We have a sweep, but it's too far. It's just too far. So I'm expecting no price action and no setups on EU today. So I'll be skipping it and putting it here. Let's look at GU. What do we have? In GU, we had a bullish fair value gap, price react weekly, we get a candle to closure, we get a push to the upside, clearly an expansion candle. On daily time frame, what do we see? We have a change in state of delivery here, and we are clearly pushing to the upside. Where is our drawn liquidity? It's this high. What's the next step? To look at 4 hourly order flow. What's the order flow? It's to the upside. How do I know? We are making high highs and high lows. Second method B, we are making only bullish fair value gaps. The market is pretty bullish. Compared to this, we were only making bearish fair value gaps, meaning market was bearish. So we got the first thing, which is daily drawn liquidity. We have the second thing, which is 4 hour order flow or 4 hour trend. Now we need to think what can happen, what can price do today, and how can I react from it. First step to do is look at daily candle, because what we are doing is we are waiting for price to open, go low, we take a trade at low, and then we push to the upside. What is price doing today? It open, already made a high, and we are pushing bearish. Not a good sign. We want price to open, go low first, and then high and close. But still, we can take a trade if there is a trade. It's just not a good sign. Now, I told in EU, we have a fair value gap, but it's not a fair value gap. Why? Because it's from the first candle of the weekly open, which is opened by a gap. It will typically show it as a fair value gap. Also, you can see that price has already broken below it. So anyways, it's not being respected at all. Do we have any other fair value gaps yesterday? We don't. So there is no zone for us to trade from, but we have a swing point. So if we already have a swing point in market, there is no zone. So we don't need to look at hourly. We already know a point in market. We just now need a time in market. So the question is, can the price can the price come this low, touching yesterday's low, and then give us a trade to the upside? It can, it technically can, but it will be quite bearish by the time it reaches here. The other thing you can do is, if you don't want to miss the setup, is just set an alert here. And even on EU, just you can set an alert here. And if we get an alert in the time that we are looking for market to trade from, which is 11:30 and 17:30, then we can look, okay, we got an alert. Can we sweep liquidity? Can we sweep the Asian session? Can we sweep the London session or New York session and then take a trade? It is highly unlikely that we will get a setup today. But if we have these scenarios in our mind, which I already explained in DXY. So for EGU, we have a point in market, which is yesterday's low or 4 hourly swing point. For price to reach here, it will be quite bearish. And it is possible to get a trade from here, but it's really highly unlikely that if you look at hourly, we had to come down all the points. Let's break it down by if you look at DXY, the difference was in DXY we had a bearish fair value gap from which we could take a trade. But in GU we don't have any bullish fair value gap. In EU we don't have any bullish fair value gap. So there is no zone. The only thing we have is common is this swing point from all these 3 points. So I'm not saying that we cannot go up. We can go up from here. We can go up from here. But for me to take a high probability setup, I don't see any way from this point. So that's why I won't be taking any setups on GU or EU today. It's highly unlikely for me to get a good risk reward trade and hence uh, take a profitable trade. So that's it. That's for my analysis. I've set my alerts here, but I won't be taking a setup today. If I get, I will really need to think and if I get a setup, I will make another video about when I'm thinking if I want to take a trade or not, about my what I'm thinking about and how I'm thinking price to react from this point or something like that. But for now, I'm not really inclined towards taking a trade. That's all. Thanks for watching. Have a wonderful day.